Hi everyone, let's go through my updated low time frame scenarios, including potential trading setups, starting with the very bearish scenario where the end of wave 5 is in after hitting this white target box over here on the medium time frame, which I will show you in a second at the end of this video. And then we have a impulsive structure to the downside, which is then a 1, 2, and looking for much lower prices, and then a wave 3, 4, 5. However, if we look into this wave 2 scenario, there's a little bit of a problem over here where you want to see a 3-wave structure in this wave 2. So this is then the first wave to the upside, which looks to be an impulsive structure, 5 waves over here. Then counting a zigzag to the downside, which is then the second structure, and then you would expect another move to the upside. So we have then an A, B, C, which is a 5, 3, 5 wave move. The most common target then for this wave C is the 1-to-1, and as it stands now with the low that is made in this B wave, this 1-to-1 is above the high that has been made, the potential high of this wave 5, which would invalidate this scenario because the invalidation is taking this high over here. So either this wave C has to be very, very short and end at like the 886, which already for a wave 2 is a rare target, because the most common target for a wave 2 is between the 0.5, which I already took off my chart because we went through it, and then the golden pocket and the 786 are left as the most common targets, and the 886 is already a rare target, making this being a wave 2 less likely. So this is going on in a very bearish scenario. If we then go to my bigger diagonal over here, this means that wave 5 is not yet finished. So then this over here is the low of wave 4, which I'll show you in a medium time frame, and we're looking to end wave 5, the green wave 5, somewhere over here, where we also have some nice confluence with 30k psychological level, weekly naked point of control, and some other fibs at that area as well. So in this particular scenario, which is not my preferred at the moment, this is an impulse to the upside and then a wave 1. Then we have a wave 2 to the downside, which then is a W, X, Y to the downside, before then a move to the upside. Now the minimum target for a wave Y is the 0.618, which we almost hit over here, sitting at 27.9k. However, the most common target for a wave Y is between the 1 and the 1.236, which is down here between 27.3k and 26.9k, which also is in confluence with this target box over here. And if I click on the target box, you can see the prices here on the right side. So in this scenario, you would expect another move to the downside. However, we do have bullish divergences going on between this low over here and the low over here, which I'll show you right now on the AGGR chart, link in my Discord, where we currently are making a higher low in price, but a lower low on the CVD, both on the yellow line as well as the blue line, which is a bullish CVD. So you expect more downside, and the biggest expectation is actually then to take this high over here. If price would take out this high, then the bullish CVD between these lows has played out. That's how you then call it. Of course, CVD can be leading, which means that the price will follow CVD to the downside. But as it stands now, of course, making this video, it's my, let's say, job in this video to at least tell you that there are divergences at the moment, and price could go to the upside and not go down over here. Honestly, I also wouldn't really like it per se if price is going to go below these lows and retesting this area, because it starts to get very, very close to the lows over here. And once price is going to get these lows, I do think there's more downside expected. And for me, the next target box is the one down here at 24,850, because there's simply not much support over here between the lows down here and this target box. So preferably price doesn't come down and bounces to the upside, which then also is the, I guess, preferred scenario that I have at the moment, where this is a wave 1, we then have a wave 2, then we currently are in some sort of an ABC to the upside, and then a wave 3. So we're like in an ending diagonal type of move, where in this particular scenario, this first move to the upside is a wave A, followed then by an ABC over here. Now wave C hit just now. The most common target of a wave C is the 1-to-1, as you can see, very, very nicely respected. If I zoom in, the 1-to-1 also had great confluence with this target box over here. Now I've been mentioning this target box in the last couple of videos already as an important support, expecting price to hit this target box for then potentially this trading setup, as shown in many videos as well, where the stop loss can be below this wave 2, lettering inside this area over here, the like common area for potentially an A, B, and then a C to the upside, for then a long position to the upside. Of course, this is a potential trading setup. Make sure you have your own strategy and entry requirements. no financial advice. So in this scenario, the golden pocket over here was part of this blue target box, including a daily level. We had this breaker, we have an order block. So there's a little bit of support for then a move to the upside for this potential wave C. And then the wave C target, if we then quickly pull from the low of 2 to the high of A to the current low that we made, and we check the most common target for wave C. The most common target for wave C is between the 1 and the 1.236, so inside this area. And the most common wave 3 target, if we look at this being a diagonal in a 1, 2, 3, 4, 5, the most common wave 3 target is between the 0.786 and the 886, as you can see right there, which is basically between 29.5k and 29.8k. So this is currently my preferred scenario. Then the second, I guess, preferred would be this one. However, taking this low, we start to get very close to these lows. And then of course the last one I'd like to show you in this video is the move down. If we then go to the medium time frame to at least give you a little bit of perspective on, it's important to zoom out when using Elliott Waves. I bet many people, what I did at the start as well, is you start using Elliott Waves and then you start at the 4 and you're like, what the hell is going on? And you go down, and then you'll find yourself in the 5 minute and the 1 minute and the 3 minute, and you have no clue anymore. But it's important to zoom out as well and see where you are. So currently the scenario that I have on the medium/high time frame is this being a 1, 2, 3, 4, currently ending the green wave 5. And in this final wave 5, this is an extended wave 1. Then we have wave 2, 3, 4, 5. So we are currently in the final leg to the upside to finish the blue wave 5 of the green wave 5, with then over here wave 2 and ending in the most common area for wave 2 if wave 1 is extended, which is the 236 and the 382. Wave 3 does not have a target if wave 1 is extended, so that's fine. Wave 4, most common target if wave 1 is extended, is between the 236 and the 382, which works very nicely as well. And then wave 5 should finish, or the most common target is to finish in between the 0.618 and the 0.786, which is currently between 28.9k and 30.4k. And as you can see, price already hit this area over here. However, I would like to see a little bit more upside still. We do have the target box still up here. We have a little bit of confluence at 30k. We have the psychological level of 30k. So that would just be a very nice target. And of course, with Elliott Waves, what is usual is to enter potential positions in this area, stop loss above, and trading it to the downside. So yeah, this being said, I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.